Hello, everyone. Welcome to today's live session. So, if this is the first one you've seen, we do these, try and do these every day, and it's a quick 20-minute look at the major markets. So, we'll take a look at euro, US dollar, pound, US dollar, stock market indices, and gold and oil. So, I'll just leave the risk warning up while I'm talking away. It all feels a bit sort of drifty the last few days. We are seeing, I think, a comeback for the US dollar. So that's putting pressure on the pound and the euro and gold to a lesser extent. So we have seen quite a good, I think, recovery for the US dollar so far this week. So that's continuing. But let's get going. Let's have a look at these markets. Just one quick thing for clients, just so you know, we do this zero spread promotion. We'll be doing it every week at the moment. That's not to say we're going to carry on doing it every week, but we like to do them now and again. But tomorrow, because it's the US, not the US, the UK interest rate decision at 12 o'clock, we're doing zero spread on pound US dollar all day. So if you're a client, that starts from 9 o'clock tomorrow through till 9 o'clock tomorrow night. And if you're not a client, to take advantage of it, you just need to open an account either via the website, Capital.com, or just download our app and do it that way. I mean, the spread on pound US dollar is pretty tight anyway. Where is it? It's not. It's maybe just over a point, isn't it? 1.1 and a bit. But there'll be zero spread. So basically all that means is the buy and sell price will be the same for 12 hours tomorrow with us. Okay, let's start with the pound, because it broke what had been something of a big level yesterday. 130 for pound US dollar. So we had seen, let's flip that over to an hourly chart, then we'll take a look at the bigger picture. So we had seen on the way up, on the way out to the highs in January, sort of up at 132, we did see 130 had been a problem there, the highs. Came back to test it January the 24th after the break, and it's sort of 130 to 130.50 had done a pretty good job of holding it up. But it did break yesterday. We saw a half decent sell-off, I think, on the break. I mean, the market has traded as low as 129.24 following the break, so it slipped 75 points. We did have a good recovery in January for the pound, and I think because, I don't know for you, but it just feels like there's not a lot going on regarding Brexit negotiations at the moment, and we're less than 2 months away, aren't we? So I think there's maybe, I mean, that clearly was a big factor in January's volatility, and it's just been giving up the gains so far this month. You know, it looks like that recovery trend, if we picked up on that, you know, that looks to be over now. If we took it off the lows in Jan. There we go. So for me, so the break below that trend line, Feb the 4th, and the break below 130, you know, it still looks a little bit weak. I mean, we've still got lots of support. There's lots of support after that vote that Theresa May lost around about 128.20. So, but it's just a little bit drifty at the moment, and I think, you know, so I think maybe the lack of Brexit progress or discussions, and also that comeback for the dollar is putting pressure on the pound. So maybe we'll see it continue to drift off. You know, there's the daily chart that we're looking at there. You know, so down to sort of, there's a lot of support at 128. You know, I still think we will see a rally into the end of March. So I'm personally still bullish pound US dollar over the next couple of months, but after, you know, an 800 point rise in January, we were always going to get some cooling off at some point. And the interesting thing now is where does this stop? So let's see what happens. But I think a big level to watch is 128. If you have a look at euro US dollar, I mean, the story for euro US dollar in recent months has been just its inability to continue with any momentum. You know, we saw a push higher for the euro. It was a week ago, wasn't it? It was last Wednesday night when we had that interest rate decision out of the US, and we did see the euro higher after that. That was dollar weakness, but it hasn't really been able to capitalize on that. And here we are again. This is the daily chart, you know, drifting off all this week so far. We've had 3 down days this week. The RSI is, well, it's 43%, so it's neither one thing nor the other. The MACD may be hooking around to give a sell signal down here because the market has been so weak the last couple of days. But let's pick it up on the hourlies. So there's our move a week ago on the Wednesday night on the interest rates, and you can just see we've just been really tight range, but a nice little downtrend since then. And we're slipping now. We're slipping today. This sort of 113.90 to 114 area that had propped the price up, just slipping back through it today. So I think maybe the risk is if we saw this afternoon a move through the lows from this morning. So this morning lows around about 130.80. Maybe we'll see a bit more pressure on the euro. But I think what is driving it here is the comeback for the US dollar over the last few days or so. So it has been a week of sort of markets that had been going one way, drifting the other. And it is, I think, for currencies, it is dollar driven. But I suppose what's interesting in gold, it's not suffering as much as the pound and the euro are. So if we view gold as just another currency, when the dollar goes up, the price of gold goes down, and vice versa. When the dollar's weak, the price of gold goes up. So we've seen something of a stronger dollar, but so far at least, this is on the hourly chart. Our gold price is continuing to hold above the Monday lows. So we had Monday lows at about 1308. Tried pushing a bit higher, got as high as 1316 yesterday, and we've come back to sort of 1313 today. So for me, maybe this level, this old level, 1308, 1309, continues to be good short-term support for gold. Of course, the bigger picture for gold is still this recovery. This even though we looked at the very short-term view there, this recovery from August is still chugging along. Any weakness still looks like a buying opportunity. I think gold could well be one of the recovery markets to watch this year. It was up 3%, I think, in January. Anyway, it is due something of a sell-off here. If it drifted back to the 1250s, it does look like a better area to get in, better risk reward. But at the moment, for short-term traders, that 1308 level continues to hold. Okay, so not suffering as much from the US dollars comeback. And let's take a look at oil. Then we'll get into stock markets. Then I'll talk a bit. I'll answer some of the questions that have come through. So let's pick up on oil. So it has, just in the last hour, it has started to move a little bit higher. We've got this afternoon at 3:30. We have the crude oil inventories. So they come out traditionally every Wednesday. How much oil is stockpiled in the US? Just to remind ourselves, this was the sell-off from October. We're still in this recovery. It did just about push. I think it was earlier this week, pushed a little bit higher earlier this week. So pushed out to its best levels since late November. And again, it's just been a bit drifty this week, so we've seen it drift off. I was picking up this level yesterday, saying I'd missed it on Monday. The market has had a bit of a look below that level, but again, we've looked at these old lows from back here from the end of Jan, 53. So this whole 53 to 53.5 had been good support for the oil price, but I think like a couple of other markets, it has been a bit lackluster this week. I suppose the aggressive trade, if you wanted a position ahead of the oil inventories this afternoon, then maybe the aggressive trade is to be a buyer with a stop loss the other side of 53. But for me, that recovery from those lows, those Christmas lows, is still going. We've just lost a bit of momentum. And as with gold, the big trend is still up. The question is just how much of a sell-off are we going to see in the short to medium term before that big trend resumes, assuming it does. So for me, the big level is around about $50 a barrel. If it breaks 50, then I think the risk is for a sell-off back towards those sort of Christmas lows. If we're looking at the RSI, if we look at the RSI down here on the hourly chart, we've gone oversold on the RSI over the last couple of hours. So again, that does add to the argument if we wanted to be bullish here. The last time we were oversold was on Monday, on the hourly chart at least, was on Monday on that spike down towards sort of 53.5. So let's see what happens. We've only got 3 hours to wait, and then we'll have the those oil inventories get released this afternoon. But for me, I would be looking over the next week for a move back up towards these highs at 56 and maybe through, because this recovery off those lows is still going. And I think the next obvious hurdle is going to be these November highs for oil up here around about $58, $59 a barrel. But given the strength of the rise, I think this is why we're not seeing much progress. We had, it's rallied something like 30% in the last 6 weeks. That's a big move, for a big market like oil. It's not some little penny stock we're talking about here. So it's a big move. So it's maybe not surprising we're seeing just a bit of caution up here, a bit of chop, and maybe some of that strength gets unwound. And let's take a look at stock markets yet again yesterday. Let's do the Dow. This time around. These markets continue to go up. Let's flip this over to an hourly chart for the Dow. So the moves yesterday, it did sell off a little bit after the initial move, but then continued higher, and we saw the Dow close. Where did it close yesterday? Around about 25,400, near enough. So it's pushed higher. So that's 400 points higher than where it was on Friday before the payrolls. So it's now moved since those lows. What's it moved? It's moved not quite 4,000 points yet, but 3,700 points off the lows from Christmas. And it's a market that's clearly still strong. It feels a bit like Groundhog Day when we talk about stock markets, because they just go up at the moment over the last 6 weeks. Any weakness brings the buyers back out. Sell-offs don't seem to last long, and I think that's what would be interesting if we had a deeper sell-off, and we'll see, okay, just how committed are people to buying into weakness, but at the moment you can see on the daily charts now, we've got to go back to Jan the 28th before we had a decent down day, and after that it was Jan the 22nd. And you can see there's only maybe three or four really big down days over the last 6 weeks. It's a market that just continues to rise. So going into this afternoon, the levels to watch going into this afternoon, I would suggest, as usual, is yesterday's low. So we saw the low yesterday for the Dow around about 25,300. That was 6 o'clock UK time. The market did rally 100 points off this level. We've drifted a bit overnight. So the overnight market this morning, it came down towards 25.3. We've seen something of a bounce. So 25,280 to 25,300 is the level to watch this afternoon. But clearly with these stock markets, there's the 5-minute chart. You wouldn't want to be sure, because the market just runs away. Let's have a quick look at European markets. The DAX, I think. Let's bring up the dailies for the DAX, and let's zoom that over. So the German market. So we had that move yesterday, finally out through those old highs at 11,320. Maybe the next big level, 11,600. Again, this is a market that is overbought. You can look at it went overbought first of all here, middle of Jan. It's pushed higher, still overbought, not surprisingly, but the momentum is still very much on its side. So even though stock markets have come a long way higher in the last 5 or 6 weeks, those trends are still very much up. If we take a look at the FTSE, then we'll get into some of the questions. Let me just have a look at the FTSE. We were looking yesterday, and it is continuing this. What looks like something of a trend line break for the FTSE. Let me just find the right line. So it never seems to want to draw lines on this FTSE chart. Let's just pick that up. Oh, there we go. Oh, why doesn't it do that? Okay, it's one more try, third time lucky. Okay, so we were looking, I think yesterday, I try and look into maybe something like that on the FTSE. If that's the legs down from August, so we were like 5-6 months into this trend. We've broken it out this week. I think the immediate hurdle, and we're almost there, is 7,200. These highs in November, just before the market fell off a cliff. And we're back up here now. If it breaks through 7.2, it does start to look as if this FTSE has reversed its downtrend, and we can start looking at, I think, much more aggressive recovery targets. So I think it's going to be an interesting few days for stock markets to see how they perform up here. And of course, I think maybe the next major announcement, it's the oil inventories this afternoon. Clearly, that's very focused on oil, but maybe it's tomorrow's Bank of England interest rate at 12 o'clock and the inflation report. So we'll have a bit more insight into the UK economy. But the FTSE performing well up there. Someone said, how can I start trading as a teenager? I think as long as you're over 18, you're allowed to start trading. If you're below 18, you won't be allowed to start trading. But I'd say just start small. I think that's I think if you watched the video yesterday, someone was asking a similar question. You just need to start small. Don't risk lots of money. Understand that you're probably going to lose in the beginning, at the very least. Yeah. So don't go in with loads of risk. Because clearly you have leverage in these markets. You can use margin to magnify the size of your trading pot. But if trades go wrong, and go wrong quickly, that can do a lot of damage to your trading pot. So the risk management side of it is really important. Always think about stop losses. If you're going to go into a trade, think about, where do I get out? Don't believe all this hype that you see. I watch on YouTube the same as everyone else, and I see all these, what I would say are just scammers with who've rented Lamborghinis for the day and say, here we go, this is you can make £6,000 a day standing on your head. I'd be really skeptical. It's not a get rich quick thing, but I think if you go into it sensibly and keep the risk low, you can make it work. But I think it's going with the right expectations and manage risk. That's a bit of a waffly answer, but I think start small and always have stop losses on your trades is the most important bit when you're starting out. Gold. We did gold. So I still think that medium term gold is pretty good. For further recovery this year, and I think in the really short term, if you're trading it short term, then the lows for the week so far around 1308 are the ones to watch. But for me, I think it could be an interesting year for gold. Natural gas again. Everyone's a fan of natural gas, aren't they? Let's have a look at natural gas. So again, usual disclaimer, I never look at this market. I don't have an idea really what's going on in this market. So all we ever do is look at the levels. And it's been incredibly volatile the last few months. We saw that after years of low volatility, went absolutely crackers in November. It's come back. And I think pretty much, we've had a couple of low volatility days here. And pretty much what I was saying last time around, if it's going to build a base anywhere, then we're here ahead of sort of 2.5. 2.5, but personally, I'd rather wait until we see some actual stability. I find it such a weird market, to have been relatively dead for so long, go absolutely crazy, then completely reverse that move and more. It's almost like it always reminds me of the crazy days of Bitcoin, the way the natural gas market has moved the last 2 or 3 months. But I think, let's see if it can build a base down here ahead of 2.5. But it's early days. It's early days, I think, for that one. Apple, yeah, let's have a look at Apple, because they had results out, didn't they? Was it a couple of weeks ago? And we were talking about those, and I think I did look at them briefly the other day. I think we were talking about 161 because it gapped open. I think it gapped open from memory. Let me try and remember. Yeah, so it was about a week ago. Let's just flip this over to maybe a 4-hour chart. And so it started January really poorly because they came out with not a profit warning, but effectively a warning on revenue, that they downgraded revenue expectations. 160 had been a bit of a barrier in the short term. The highs from December, then late December, then it falls off a cliff. This is where it was the day after earnings, so the 30th of Jan. So it opened above that 160 level, which was bullish, and it's continued to hold. And it's built on that. So for me, if you were looking at the 4-hour chart here, the sell-off from November. We'll take a look at the dailies in a minute. We're doing this a little bit backwards. Oh, hang on, I put that in the wrong place. If we were looking at that, if just looking at it from a pure trend price action point of view, we'd had the sell-off from October from $235 a share as low as 140. Bobbles around sideways, gaps up on the earnings, gaps through what had been an important level for the short term, at least $160 a share. So for my money, we're still recovering. We're still in this sort of recovery mode off those early January lows. So let's just have a look at that. So looking something like that. So for me, it's like it's clear it's a smaller version of the gold recovery that's been going on since August. Similar sort of psychology going on here. So for me, any weakness back towards 160 looks like a buying opportunity. If we flip this over to the dailies, and I think 140 was an important level for Apple shares anyway. Going back to, here we go, when we looked at this last time, going back to here. So the lows from 2017. So for me, I think looking at that big picture, it's maybe even more compelling that we'd had this downtrend, bang, breaks out the downtrend, breaks through 160, and we do have something of recovery going on. So let's see what happens. But for me, any weakness in Apple looks like maybe a buying opportunity. So Dow Jones continue the trend. I think so for now. Like we saw, these markets. I mean, personally, the one I watch is the S&P because it's a broader US index. But if we flip this over to a 4-hour chart for the S&P, let's get rid of the MACD for now at the bottom. There's our, if you looked at that trend, that is a that is a market that's in an uptrend, isn't it? So if we picked up, it looks maybe something like that on the S&P. Let's just get that. There we go. So that was what was that? 24th of December, I think. Christmas Eve. Gaps up on Boxing Day, and then bang, we are just continuing with this recovery in the S&P. Maybe if it does push a lot higher, 2800s. 2800s were really clearly a problem early November, early December, and actually back here, October. So maybe it's got some legs left in it, and it starts getting a bit more interesting if we push up to there. But with this trend, you'd want to be a buyer. Clearly at some point this trend is going to end, but we're now 6 weeks into it, and the clever side of the market has been to be a buyer. I never thought we'd see a comeback like this after the massive sell-off we saw in December, but it's what we've got. It's almost a V. We're seeing a V-shaped recovery in this, and I don't think many people in early January would have thought the markets would have bounced back this far, but they have. So do you want to be right or do you want to make money? And if you want to make money, you'd have to be a buyer. Any info regarding Kia Group? Are they a UK water company? I can't remember. I haven't got. I don't think I've got them set up on here. I don't know what they did today. Am I spelling it wrong? Kia Group. There we go. Have a look at those. What do you think? It just looks. I mean, what is the trend in Kia Group? I mean, it has been losing since for at least the last 2 years, isn't it? Clearly something happened last year, end of November. I'm guessing some sorts of profit warning or bad results. I mean, for me, I'd rather buy stuff that's going up than buy stuff that's just sliding like that. So is it £5 a share, or is it £5 a share? Okay. So for me, that trend is still down. I suppose if you were a real bottom fisher, you could be a buyer now with a stop under those lows from December. But yeah. I think the risk always is, if we get a rally, the people who missed out selling up here just sell into strength. So yeah. So for me, the risk is maybe for further weakness. Let's see what happens. Okay, that's it then, isn't it? So the thing to watch this afternoon is oil inventory data at 3:30 this afternoon. That's the next major announcement. We have seen in the last hour something of a bounce back for oil. It's still going on, so bouncing off that 53 level up at 53.80. Let's see what happens. So we could see some volatility at 3:30. Stock markets still strong, still buying the dips on stock markets from a technical point of view. And tomorrow, don't forget, it's the Bank of England interest rate decision. So we'll do the session at 12:30 tomorrow. So that works well because the interest rate decision is at 12. So maybe we'll come into some volatile markets. Okay, so we'll wrap things up there. Thanks for coming along. Don't forget, we're doing that zero spread thing. If you're a client, you'll get an email and a push thing about that. If you're not a client, just go to the website, Capital.com, or download the app, and you can get up and running and have the zero spread on the pound tomorrow. But for today, thanks for coming along. We'll wrap things up there, and hopefully see you again tomorrow.